Grow CFO is where finance leaders grow together. Join thousands of like-minded professionals using Grow CFO to access the combined knowledge and experience of the finance leader community. You can join us today at growcfo.net. Hello and welcome to the Grow CFO Show. I'm your host, Kevin Appleby, and today I've got a guest with me, Katrina Nacci. Now, Katrina is an expert in cross-border accounting, and we'll find out what that is in just a few minutes. Katrina, welcome to the Grow CFO Show.
Thanks for having me, Kevin. Looking forward to it.
Katrina, tell me a little bit about yourself.
So I'm based in Frankfurt, Germany. I've been here for the past 11 years, but I'm originally from the US near Boston. So I started my career with PwC in Boston in the standard audit practice, auditing public companies, mostly in the tech space. But I always wanted to live in Europe for a little while. And I was contacted by a recruiter. He said, we have this opportunity in Germany for a joint German-US listed company. We need someone to do their US SEC reporting. I didn't know anything about Germany at the time or know any German whatsoever, but I figured I would take the chance and try it out as a chance to get over here. And I've been over here for over a decade now. So it's obviously worked out for me. I ended up back at PwC actually as a local hire here in Frankfurt in the capital markets and accounting advisory group, which was the perfect fit for me. There was actually this specialist team within that was focused on taking European companies public in the US or working on accounting conversion projects when there were acquisitions happening between the US and Europe. And it was, mostly Americans on that team that were either on secondment or were just local hires like myself. So that's where I've gotten the bulk of my technical expertise for what I do now. I was also with them on secondment in Dubai for a couple of years, doing similar capital markets transactions, but obviously a different part of the world. A lot of that actually UK facing just because of the kind of nature of relationship between those countries. And then came back to Germany after my secondment was over and left PwC shortly thereafter. I went into private equity for 3 years. I was the first European finance hire for a Toronto-based company. I basically built up the European finance team from scratch, put all the policies, procedures, hired underneath me in Luxembourg. And then they were quite acquisitive all around Europe, so have exposure to a lot of different statutory gaps and all the purchase price accounting and that fun stuff. But ultimately realized I wanted to go back into accounting advisory. And I also wanted to be able to have clients on both continents and be back in that cross-border space. And I realized that the only way that I was going to be able to do that was to go into business for myself. So I made the leap about 2 years ago. Now I specialize in cross-border accounting advisory, specifically helping European companies with US transactions, whether they're doing a fundraise with big US private equity and venture capital, they're maybe looking to IPO in the US, or they're looking to get acquired by a US company. The initial conversion project to take them through either from local GAAP or IFRS to US GAAP, and then also potentially help them on the back end as like a fractional chief accounting officer with their technical accounting topics. So really enjoying it. And that's where I am right now. Really love just talking to CFOs and educating them on what it means to have and bring in US stakeholders in terms of standing up and making your accounting and reporting function more sophisticated.
Brilliant. So, Katrina, that first move, US to Germany, and you didn't know any German.
No.
That must have been a challenge. So how did you manage to pull that one off?
Part of it was definitely luck. I mean, the recruiter was specifically looking for somebody that was based in the US. And so I think that there was an expectation that they weren't going to know any German. And luckily for me, the job didn't need to know German because I was always doing reporting in English. Of course, it was a little bit challenging when there were still colleagues and stuff talking around me in German, but I slowly picked it up. And maybe the first couple of years, I wasn't as diligent as I should have been at learning it. I was just learning it enough to go into restaurants and such because I never needed it from a work perspective. I actually learned most of my German when I was in Dubai, funny enough, because I wasn't traveling as much for work. And so I actually took physical classes, which really helped a lot. And then being able to just come back to Germany when my secondment was over and have more exposure to it where I could just pick up things that were happening around me. And in private equity, I was in the Frankfurt office and I was the only non-native German speaker. So I tried a little bit more and was arguing back and forth with our bookkeeping team when I needed to. So now I can read lease contracts and things in German when I need to. I'll never call myself fluent because I'm a perfectionist, but I get by in day-to-day situations and a little bit from a work perspective as well.
And so a brief travel to Europe turned out to be 11 years. You've now formed your own business. still based in Frankfurt. Are you ever going to go back to the US?
I don't think so. So, of course, when I first moved over, I didn't really know what I was going to do. I was just trying it out. I was 25 when I moved, so I was still figuring life out in general. But I realized working for other companies, I would have every couple of years this wave, a little bit of like an existential crisis. Like, do I want to stay out here and travel? And I really enjoy the European lifestyle and way of life. But obviously, I miss my family. I wish I could get home to see them more. And I grew up on the water. And so being landlocked now in Frankfurt is also a little bit difficult. And so it was always this kind of push and pull of, do I want to stay here? Do I want to go back? But I feel like now that I've really found this niche that I have in the cross-border accounting space is obviously very technical and suits me professionally based on my experience. But I also feel like it crosses over into my personal life. That's actually how I live my life as well, to go back and forth. And I feel like that kind of niche that I've chosen, and then also just working for myself and having the flexibility to go back and forth and take a business trip back to Boston for a conference and meet other CFOs that are working internationally, and then also go home to see my family. It feels now finally a little bit more sustainable to say, okay, I can stay here. I can make Frankfurt really home and then go back and forth as I choose. So I'm actually working on getting my German citizenship right now. So hopefully having both passports will also allow me to potentially move back to the US for a couple of years if I need to for some reason, and then come back here as I choose.
Brilliant, brilliant. So to form your own business, you're clearly addressing a very specific niche. So what sort of issues is it that you solve? Tell me a little bit more about that.
So my real bread and butter is going through accounting conversion topics. But I also, because there's different elements of accounting and reporting from going from the Europe to the US, it could also be more of like an IPO readiness and execution type situation. So the past few years, I've been really focused on accounting conversions, like just churning them out. And because I'm just one person and I don't have a big firm behind me, there's obviously a lot of advantages to that for my clients because I don't have the overhead. But I also have to figure out how to really make my processes scalable for myself. So I'm not only focused in like the cross-border and accounting conversion space, but I'm also more specifically focused in the biotech manufacturing space, because once you see those financial statements, they start to look similar and you can really help them to plug and play their US GAAP accounting policies. So that's where I'm focused, and more on like the scale up side. So my kind of perfect client would be a company probably in the UK is where most of my clients are. Tech SaaS just did a Series B, probably fundraise with US investors. And that kind of triggers them having to go through an accounting conversion for the first time because their investors are asking them for US GAAP financial statements or even IFRS financial statements. And they need to figure out how to go through that one-time conversion and then also obviously keep up with that on a day-to-day basis. So most of my work is in the accounting conversion space. But I'm also working with a company in the Netherlands right now that I'm taking them through an accounting conversion. And then on the back of that, they're also doing a de-SPAC into the US with a US shell company. So there's an element as well of just like overall project management through the filings, the offering, kind of what needs to be submitted to the SEC when they make that acquisition. And I can do that because of my IPO experience as well.
Okay, so we're saying that primarily the reason that a company is going to get into the need for this conversion is because firstly, US investors have got involved. So does that mean that they've prepared a set of statutory accounts in the UK or somewhere else in Europe, and you're then converting those statutory accounts to their equivalent in Europe?
Yeah. So most of the times when it's a scale-up company, that's all that they've been required to do so far is a statutory set of accounts, either in the UK, the Netherlands, Austria, wherever they operate. I can tap into whatever gaps locally I need to and take them up to US GAAP or IFRS. There could also be a situation. So I just finished working with a company. They're actually public in the UK. And so they already have consolidated IFRS financial statements, but they're going into the US and setting up a US subsidiary. And this is actually a special situation because most of the times when companies come to me and they see I do this cross-border work, they'll say, hey, we're starting up a US subsidiary or a branch. We need some accounting help. And most of the time, what they really need is just like a bookkeeper and a tax preparer. Because when you're first setting up a US entity, you don't necessarily need full US GAAP financials. You just need financials for your tax returns, right? But in this situation, the company was a fintech, and I've seen this pattern emerging as fintechs become more and more popular, that they're already public in the UK. So they're doing IFRS and consolidated. They're in a couple other countries as well. But day one of going onto US soil and setting up their US subsidiary, they already need full US GAAP and they need a full US GAAP audit. And that's because of the regulations around the fintechs, where either they're regulated by the states or by the SEC that's requiring those US GAAP financial statements. And so I just finished working with one and kind of took them through a IFRS to US GAAP conversion so that they understood the differences when they start to set up their US trial balance on how to record things differently in the US and then bring them into their IFRS consolidated financial statements.
So what are the key differences you find in the type of tech company that you're dealing with?
I get this question from people all of the time, and I have to say I really don't like to answer it. And that's because if you see all these people that are publishing things on LinkedIn, like the top 10 differences between IFRS and US GAAP. And that's all well and good because there's definitely a level of just general education that people need to be aware of, the specific differences. But I feel like for me coming in and trying to give somebody advice before I work with them to say like, hey, these are the high level differences you should consider. In my experience, that tends to backfire a little bit because it makes people a little bit too comfortable that they understand the differences, where you really don't know until you open up the hood of your specific company and start to look at what you're actually doing. Because sometimes there's even misalignment between like what you're doing and whatever statutory regulatory standard you're under says you should be doing. And so I really just want to avoid giving like a false sense of security for people to understand those differences, and instead to focus the education more around the process for how they assess the differences to make sure that it's complete for their purposes. A couple of companies, actually, this happened to me recently, where they were already reporting under IFRS, but when I picked apart certain things, I was realizing, okay, well, this is technically not a difference between IFRS and US GAAP, but it's a difference for you because I'm not sure you're doing your IFRS accounting necessarily correctly. So that's why I hesitate to just list some bullet points off for you.
Yeah, but so it's complex because of that. But in general, what are the big differences between IFRS and US GAAP?
There's some differences around stock options. I've been really into the weeds on this lately for a couple of different clients, just in terms of how you would determine whether something is classified as equity or a liability from a stock options perspective, and then some differences as well in how you amortize those. There may be differences. Again, it's really depending on what's your starting GAAP, because each of the European GAPs is different. And I've worked across all of them, but there's likely differences with your like capitalized software, for example, between local GAAP and US GAAP. I'm working with an Austrian company right now where they had some differences in inventory and how that gets valued based on a LIFO, FIFO versus, I don't even know how you would say it in English, like a lowest cost principle. So there's a lot of differences that, again, you just really have to unpack what the company is specifically doing, because both standards have a lot of optionality. And that actually tends to work in your favor when you're converting to US GAAP, because there are a lot of policy elections that you can take, which when I write up those policies, I try to align them as closely to what the company is currently doing so it doesn't involve as many conversion adjustments.
One thing that surprised me there is you're saying that it all depends which country in Europe you might be converting from. I naively thought that accounting standards across Europe were pretty much the same.
I think they all have their nuances. I think the challenge is, so I consider myself pretty much fluent in US GAAP and IFRS. Now, that doesn't mean that I could sit here and quote to you every single paragraph and like what exactly it says. It's more that I understand the concepts and I can really get in there and like do the research, and I understand the standards and the updates, etc. I will not say that I'm fluent in every single European accounting principle that exists, right? But the more important piece when you're having an expert take you through an accounting conversion is for them to be an expert in the GAAP that you're going to and not the GAAP that you started with. And also be an expert in going through that process. And the reason why I say that, and the reason why I don't need to be an expert in all these different European statutory GAPs, is because, one, a lot of the times the companies, especially when they're smaller size, they're not as rigid around this. Maybe they've never even had an audit. And so there could be elements of what the regulation says that they're not actually doing. And it's also more important because there is optionality to just understand how to really do a thorough discovery and walkthrough session to be able to just thoroughly document when there's a lack of accounting policies otherwise in-house, what you're actually doing under your current GAAP for each individual line item and how that translates to your US GAAP. So I'm not really sure if I answered your question, but yeah, all of the countries have their own kind of nuances.
Yeah, I get that. This is all about what's the destination? Where are we taking the figures? And from some points of view, it doesn't matter what you've published before to which standard. As long as we understand how the original numbers were calculated, we can recalculate them the way that's going to fit US GAAP.
Right.
So we talked about that situation where you've got a US investor. They want statutory accounts. Is that not the case that investor wants to be updated with management accounting numbers?
Sometimes that serves as like a stopgap or maybe like interim accounts. Could be quarterly, for example, or even monthly that they're asking for those management reports. But there's usually two reasons why they want US GAAP numbers, if not quarterly, at least annually. The first one would be that if they're having to do some sort of consolidation of the European company, or at least pick up their share, depending on how much they own, right, and how they do their equity accounting, they obviously have to be comparing apples to apples. So they couldn't pick up the results of a company that's reporting under UK GAAP and put them in their US GAAP financial statements. It's just the policies aren't aligned. So that's obviously a big part of it.
That's a big driver.
Being able to consolidate apples to apples. The other big part of it is obviously that as these sophisticated investors come in, they want to make sure that there's an ongoing kind of diligence process around pulling the numbers together, and that involves an audit. And so if you have to have more sophisticated accounts, either under IFRS or US GAAP, and again, the US investors are more familiar with US GAAP, they not only want you to have US GAAP numbers, but they want you to have an audit of that. And so it's really important to really take the time to go through a thorough conversion and make sure that you have it all documented so that you can go through the audit and then be able to give those audited financial statements in a timely fashion to the investors so that they're comfortable with how the financial information is being prepared.
Clearly, if you're going beyond the fundraise with the investor and you're going onto an IPO, and that IPO is taking place on a US market, then you've absolutely got to have US GAAP accounts. That becomes the overriding need over and above any other country's standard.
Correct. There are some situations where you could qualify as what they call an FPI, a foreign private issuer. And that would be if your top company that you're planning to take public in the US is incorporated outside of the US. And then there's other metrics that you need to meet as well around like where your investors and assets, et cetera, are. So there are quite a few companies in Europe that are actually reporting into the SEC under IFRS as a public company in the US. But these days I'm seeing more and more as companies are getting ready to do a US IPO that they're setting up an entity in the US and doing Delaware flips and things like that. So it would be the US entity that is the one getting listed. And in that case, you don't get to take those special exemptions for being a foreign company.
So, Katrina, you're doing this as a solopreneur and you're dealing with a limited number of clients because your limits your own capacity.
Yeah.
Typically, if a company is looking to have those US accounts, what are their choices of how they go about getting them? Obviously, they could go to somebody like you, but where else would they look for that expertise?
So I actually did a poll on this last year for my own kind of marketing understanding to say, hey, LinkedIn audience, when you have some sort of accounting advisory need, how are you finding your advisors? And it was more than 50% of people that just said they went to their auditors for a recommendation. And the problem with that is that most people that I talk to aren't super happy with their auditors. So I'm not sure where they trust them for a recommendation. But also their auditors, the network of the kind of peer companies that they have are also just going to be another typically big firm, Big 10, Big 4, et cetera. So when you're getting referred to a Big 4, a Big 10 firm, there's obviously a lot of overhead there. And the people that you're dealing with are typically lifers in those companies, or they haven't really had industry experience. So it becomes sometimes more of like a theoretical advice and very practical kind of roll up your sleeves. So that's where I see most people looking for advice or advisors. Where I've found my clients is I'm in a couple of different CFO groups. And when people ask questions, I can see that they're going through some sort of US GAAP conversion or getting ready for an IPO, et cetera. I'm just jumping in and offering some advice. And then people are just naturally coming to me that way. So I think that maybe there's more of a prevalence as well of those CFO communities and having peers to bounce questions off of that can help you find advisors. But those are the main ways that I see people looking for help.
So do you do very much outside of those groups in marketing yourself?
I'm on LinkedIn. I try to share things just to stay relevant and top of mind. Because what I do is so specific that it's a specific company at a very specific point in time that needs my help. I really need to catch people at the right time, right when they're going through a fundraise or just on a fundraise or they're looking to otherwise exit. And sometimes it's hard to gauge when that's happening. But I think for me, it's just important to stay top of mind for those people so that they know me as the US GAAP expert. But I really just enjoy the process of educating European CFOs, even when there's nothing in it for me, even in the short term, to just have conversations like this. I've done a couple of different workshops in London as well, just educating people. Like I said, it's more important to educate on the process rather than the specific differences. Because what I want to make sure is, even if you're not really the right company to work with me, because you do need a team of like 10 people to come in from a big firm, I just want to make sure that you at least understand the entire process from A to Z before you think of outsourcing it or bringing in an advisor. Because otherwise, I think that there's a real lack of strategy for the company to have ownership to say, okay, this is the process we're going through. These are the steps. This is what we can potentially do internally to get ready. This is where we need an expert advisor. This is what we need for audit documentation. And especially, this is how we're going to manage it on a day-to-day basis going forward to make sure we have the right knowledge transfer. And I see that when companies go and they just bring in a big firm, that doesn't really happen. They're just like, oh, okay, it's off our plates now. We don't need to think about it anymore. And so that's where I like to just have these types of conversations just to make people aware. Because like you said, I can only take on a limited number of clients at once, but this is a way of still allowing me to help people at least open their eyes a little bit more, because I've been on both sides of the fence. So I feel like I can give some sort of a little bit of an unbiased opinion about how you should at least strategize that process.
Now, I know, Katrina, that in the fractional world, it's very popular to have a fractional CFO these days. In your world, where you're in this very niche field of conversion accounting, is that sort of fractional role that you've stepped into there a common one? Are there many other people doing this?
I haven't found a single other person doing this, to be honest. I'm mostly competing with much bigger firms because most of what I do isn't really on a fractional basis. It's more coming in on a project basis for 2 to 4 months, maybe a little bit longer, depending on the type of work, and just really helping them on a project transaction basis to get through that one-time conversion. However, especially on the scale-up side, when a company is scaling up and they just have more sophisticated accounting and reporting requirements, they need to obviously go through that one-time conversion, but then they need to also maintain it on a day-to-day basis going forward. And this is where there's a really big difference, because I've worked with companies on both ends of the spectrum, where on the scale-up side, they really don't have the budget to have somebody full-time in-house or have the budget to bring it out to a big firm and just kind of take it all over. But they also don't really need full-time support going forward on a day-to-day basis, as long as their finance team is really strong locally and what they need to do to book up to local GAAP, and they understand how to then top it up to US GAAP on a monthly, quarterly, annual basis. They don't really need a full-time person. And so I see an opportunity, and I haven't really explored this too much just because of the clients that I've worked with so far, but I see an opportunity for me to serve as more of a fractional advisor on an ongoing basis. I would say it's more in the fractional chief accounting officer space than the CFO space, because I am so technical on the accounting side of things, but specifically focused on the accounting that you need on an ongoing basis for your US GAAP. So that as you have questions, you enter into new transactions or a new standard, it's just easy to be able to call me up or send me an email and bounce things off of me to make sure that you're staying up to date in what you need to do.
So you're going into a typical client running a project where you're getting under the skin of the numbers, working out what's different, what conversions need to take place, doing the initial conversions. But I'm reading into that you're telling me you're also training the team in that client to be able to do that themselves on an ongoing basis.
Yep. So this is, I think, what makes me a bit different from bigger firms as well, because I am more focused on the knowledge transfer. I've seen that in the past, both when I was an advisor and also when I was in industry, that most of the time when you outsource these projects, they just come in, take all the files off your desk, do everything in the background in kind of a black box, and then plop it back on your desk. And you don't really know what happened at the end of the day or how to take it forward. And because I am working with more of these scale-up companies that can't afford to bring somebody in full-time in-house, they really need a quick way to understand and get their heads around, okay, like, just give me the highlights. Like, what are the differences? How do we make sure we can keep them up to date going forward? And they don't want to spend the time to kind of just read through a Big Four PDF either, because that's not specific to them. They want to know what are their specific differences. So I've actually incorporated this recently into my conversion process, where there's different elements of how involved you need me to be versus leveraging the internal team for some of the initial documentation of what you're currently doing. But on the back end, after I've prepared all of your US GAAP policies and written up what the differences are and how you move forward with that, then I sit with the team either in person or virtually for half a day or so. And we actually go through all of the line items in their financial statements and the specific transactions that they have and talk through, like, okay, these are the differences that I've identified. What supporting files do you have right now for how you're reconciling those numbers locally? How do we build in the adjustments that you need to be able to like maintain the US GAAP ledger going forward so that you can prepare your trial balance? And so really involving them in the process, which I've gotten great feedback on because the team is then like really interested and we're both getting our hands dirty and figuring it out along the way. So I don't come in and propose to just sit in front of them and lecture them for 6 hours. It's really more interactive, but I feel like they take a lot more out of it that way.
And to my mind, that's the best way to learn, is you've got the head knowledge, but you've also got to have the hands-on thing so that it sinks in. 80%, I think, of learning something is actually doing it for yourself. Yeah.
I think that benefits both of us because on their side, they're obviously learning and doing, but it also benefits them because then there are certain things that I can say, okay, I don't have to do all of this from A to Z for you. You only need me to come in for this specific part. The internal team can do some kind of pre-work homework before our workshop for me if you have the capacity. And then afterwards, you understand the differences. So I don't need to maintain those ledgers for you or put together your US GAAP financial statements. You can go ahead and do that and maybe just layer me in as an advisor in that process. But it's obviously saving them a lot of money as well because they don't need somebody to come in and do the A to Z for them. And on my side, then, because I have less time and effort involved in that process, if I'm not doing the full process myself, I can work with a lot more clients at once, can impact a lot more people, and I can also see more things to take on to the next client and improve the best practices along the way.
Yeah. So if you're doing project work all of the time, Katrina, that means that you're going to rely on a steady flow of new projects coming along to you. So
right.
Do you find that's a challenge, manage to line up the new projects to give yourself a reliable flow of income?
Yeah, it's something that I'm still adjusting to. Actually, the first year that I was working for myself, I was actually working mainly through other accounting advisory firms. So there were a couple in the US that wanted to hire me, one in the UK, and they would occasionally have this cross-border work going on, but they didn't have the expertise in-house. And again, they didn't really need full-time advisors working on this. So they would bring me in to help with their accounting conversions in the background. But I pretty quickly realized that I didn't want to white label myself because I feel like my unique skill set and experience is my own brand. And I wanted to be able to control the scope and the process. And I think, doing things in a little bit more of an innovative fashion in terms of how I give out my offer portfolio and things like that. So I pivoted last year to bringing in my own clients. And it's definitely been ups and downs in terms of how busy it is. I've been very fortunate that I have had a very long-term client I've had them for about a year now, and it's continuing until the end of this year. And it's a much bigger company. It's actually an Austrian subsidiary of Intel. And I just finished taking them through their first US GAAP audit at the end of June, but they're keeping me on to help them through some of the process improvements that they need to make to how they do that consolidation and building in new systems, et cetera. So that's a little bit of an exception and on the bigger end of the clients that I would work with. But that kind of allowed me, maybe made me a little bit complacent because I had steady income coming in. But I've obviously pulled in a few other things as well in the meantime, and now have some other recurring work streams coming into play. It's definitely up and down. I think for me, another important aspect, I'm getting my name out there and having conversations with CFOs, but equally as important is making it known to the private equity and venture capital worlds what I'm doing, because there is usually an element of private equity somewhere in that process. But the problem is that I'm very much in the background and just talking to the company itself. And so normally their investors don't really know that I exist. But if I can build some of those relationships in the private equity space, they're the ones that have multiple portfolio companies that they're doing things with in Europe. And so that's where I could develop a little bit more of a revolving door model potentially. But I really just, it's very hard to crack into that world unless you know those people personally. I am more energized just talking to CFOs. They seem more like peers to me. So I'm doing a lot of things in this space, in the education space, and just networking with CFOs. I've had people that I've met a year or so ago and had a couple of chats with that know me as the US GAAP person, but they just never had a US GAAP need. But I just finished a project with somebody who I had a relationship with for the past couple of years. And as soon as they decided to go into the US, they called me up because they knew that I was that person. So it's definitely a long game of building those relationships and then just being able to weather the storm of the slow months.
So thinking back to 2 years ago when you decided to step out on your own, what do you wish you could tell yourself of 2 years ago that you now know?
That's a good question. Nobody has asked me that before. I think just be patient and don't expect everything to happen all at once. I can feel that even now myself because I am trying to surround myself in more communities where there are other solopreneurs that are in similar spaces or even just completely different, just to have a better understanding on the sales and marketing side, because obviously the technical side is the easy part for me. It's more some of this other stuff that I've never had to do before. But it's hard to not compare yourself to other people and where they are with their journey or what they're doing. You see somebody in the marketing space that's doing like a webinar for $100 and having a bunch of people join. And I think that there are things that will probably come along for me like that, where I can be a little bit more experimental and have these different types of, I don't know what the right word is really, more passive income streams, I guess, like courses or things like that. But for me, it's just, I think I've spent the past year or so absorbing all of that information. And now I just need to not get overwhelmed with executing it all at once. So I think that's something that I could say to my past self, but I could also say to my current self right now, like, just be patient, but you're only 2 years into it. I think that the business will probably look very different in 3 or 5 years' time.
Katrina, that sounds as though you've been on an absolutely fascinating journey and into a really unusual position. As you say, you don't know anybody else who's doing exactly what you're doing. And I think that's a fantastic place to be. Lonely place to be as well, because you've got nobody to go and ask questions and say, how did you cope with that when you got to this stage of your business?
Yeah, that's the challenging part too, because even something like I had this really weird transaction going on with this de-SPAC listing in the shell company where I didn't really know how to set up the contract and who I should contract with. And I didn't really have anybody to ask. I was trying to see if I should get a lawyer involved. I ended up being able to bounce it off of my old PwC partner. But there are things like that where if you don't even have just a person that you could shoot a quick message to, like somebody else that you're in business with, sometimes that could be the most challenging. Just those little questions where you're like, I don't know how to solve this.
Yeah. And there's always going to be that oddball that gives you that question, isn't there?
Yeah.
Katrina, that has been absolutely fascinating. Thank you for being this week's guest on the Growth Show.
Thank you for inviting me.